What is a primary market? A primary market is a source of new securities. Often on an exchange, it's where companies, governments, and other groups go to obtain financing through debt-based or equity-based securities. Primary markets are facilitated by underwriting groups consisting of investment banks that set a beginning price range for a given security and oversee its sale to investors. Once the initial sale is complete, further trading is conducted on the secondary market, where the bulk of exchange trading occurs each day. In this video, we are going to cover everything you need to know about primary markets, so before proceeding ahead, kindly subscribe the channel and don't forget to press notification button. The primary market is where securities are created. It's in this market that firms sell new stocks and bonds to the public for the first time. Companies and government entities sell new issues of common and preferred stock, corporate bonds and government bonds, notes, and bills on the primary market to fund business improvements or expand operations. Although an investment bank may set the security's initial price and receive a fee for facilitating sales, most of the money raised from the sales goes to the issuer. The primary market isn't a physical place, it reflects more the nature of the goods. The key defining characteristic of a primary market is that securities on it are purchased directly from an issuer. All issues on the primary market are subject to strict regulation. Companies must file statements with the Securities and Exchange Commission, SEC, and other securities agencies and must wait until their filings are approved before they can offer them for sale to investors. After the initial offering is completed, that is, all the stock shares or bonds are sold, that primary market closes. Those securities then start trading on the secondary market. What are the types of primary markets? There's a primary market for just about every sort of financial asset out there. The biggest ones are the primary stock market, the primary bond market, and the primary mortgage market. The most common type of primary market issues include: Number 1. Initial public offering or IPO. Number 2. Rights issue or offering. Number 3. Private placement. Number 4. Preferential allotment. Similarly, businesses and governments that want to generate debt capital and choose to issue new short and long-term bonds on the primary market. An initial public offering, or IPO, is an example of a security issued on a primary market. An IPO occurs and a private company sells shares of stock to the public for the first time, a process known as going public. The process, including the original price of the new shares, is set by a designated investment bank, hired by the company to do the initial underwriting for a particular stock. For example, Company ABC hires 5 underwriting firms to determine the financial details of its IPO. The underwriters detail that the issue price of the stock will be $15. Investors can then buy the IPO at this price directly from the issuing company. This is the first opportunity that investors have to contribute capital to a company through the purchase of its stock. A company's equity capital is comprised of the funds generated by the sale of stock on the primary market. A rights offering or issue permits companies to raise additional equity through the primary market after already having securities enter the secondary market. Current investors are offered prorated rights based on the shares they currently own, and others can invest anew in newly minted shares. Private placement allows companies to sell directly to more significant investors, such as hedge funds and banks, without making shares publicly available. And preferential allotment offers shares to select investors such as, usually hedge funds, banks, and mutual funds, at a special price not available to the general public. Let's quickly recap what we have understood so far. 1. In the primary market, new stocks and bonds are sold to the public for the first time. 2. In a primary market, investors are able to purchase securities directly from the issuer. 3. Types of primary market issues include an initial public offering, IPO, a private placement, a rights issue, and a preferred allotment. 4. Stock exchanges instead represent secondary markets, where investors buy and sell from one another. 5. After they've been issued on the primary market, securities are traded between investors on what is called the secondary market, essentially, the familiar stock exchanges. 6. Investors typically pay less for securities on the primary market than on the secondary market. Interrogation of primary market versus secondary market. The primary market refers to the market where securities are created and first issued, while the secondary market is one in which they are traded afterward among investors. Take, for example, U.S. Treasuries, the bonds, bills, and notes issued by the U.S. government. The Department of the Treasury announces new issues of these debt securities at periodic intervals and sells them at auctions, which are held multiple times throughout the year. This is an example of the primary market in action. Now, let's say some of the investors who bought some of the government's bonds or bills at these auctions, they're usually institutional investors, like brokerages, banks, pension funds, or investment funds, who want to sell them. They offer them on stock exchanges or markets like the NYSE, NASDAQ, or over-the-counter, OTC, where other investors can buy them. These U.S. Treasuries are now on the secondary market. With equities, the distinction between primary and secondary markets can seem a little cloudier. Essentially, the secondary market is what's commonly referred to as the stock market, the stock exchanges where investors buy and sell shares from one another. But in fact, a stock exchange can be the site of both a primary and secondary market. For example, when a company makes its public debut on the New York Stock Exchange, NYSE, the first offering of its new shares constitutes a primary market. The shares that trade afterward, with their prices daily listed on the NYSE, are part of the secondary market. And secondary markets are further divided into two types, which we will see in our next video, and there were many terms like NYSE, NASDAQ, and over-the-counter, OTC, etc., which we will also going to discuss in next video. And we will make you financially literate through our simple videos. Kindly like, share, and subscribe the channel.